Okay, good evening, everybody. Hope everyone's okay. Hope everyone is good. Hope everyone can hear me. All of that kind of jazz. And how is everyone? As I said, thanks for indulging with me. A little bit 15-minute delay, but I'll still try and get everything done before 9 o'clock, he says. We'll see how things go. So what are we going to cover tonight? Well, I mean, given where the geopolitical place is, I think Bitcoin and altcoins have actually put up a surprisingly good fight over the last week or so. And, I want to investigate whether or not that can continue, what that may be, what some of the factors may be that can either sink it, no pun intended, with what's going on over in the Strait of Hormuz at the moment, or what can actually keep this train moving in an upwards direction. So we'll have a look at that. It's not really too much news to go into. I am not a geopolitical commentator here. Just check Discord war thread if you can't be bothered to look at Twitter or watch the news yourself and just form your own opinion on that. But the war ain't over. Some sides are saying it's getting close to being done. Others are saying they're in for the long haul. So we'll just play with the volatility that comes from that one. We'll have a look at Bitcoin price. We'll have a look at altcoin prices as always, and just generally how the market feels. And then we'll take from there. Any questions you got, drop them in the chat. I didn't get any this week, so that being the case, hopefully we can wrap up. So let's just jump straight in. And actually, we are going to end up talking just about oil to start off with, okay? Because oil has basically been the driver for the markets, in my opinion, over the last sort of 48 hours since the markets opened on Sunday. That is obviously because not only is the Strait of Hormuz closed effectively, we'll have a look at some charts of that in a moment, but we're actually seeing that a lot of Middle Eastern oil production is being reduced. What did that lead to? One hell of a spike on the price of oil. Now, just to give this a context, I don't think the chart here, which on the 4-hour time frame, really gives the true reflection of the context here. So if we put it on the daily time frame, I still don't think you get that much of a picture, but it is an incredible move up there. Weekly, you can kind of see we're starting to gap up, but I just want to draw your eyes whilst we're on the weekly, because the weekly even has a gap on it, but it has a gap from 2 weeks ago. So bear in mind, beginning of March, pretty much the start of this conflict, can't really decide what we're calling it just yet, oil's price was sitting around about $67, okay? Just look at how high this thing spiked. We went from $67 to a high of, just get it there, $120, a near 80% increase over the space of 2 weeks. Now, like a good altcoin, the volatility is great. I'm trying to drop this down. And what do we actually see? The price then came crashing back down. But prior to that, you talk about Sunday, everyone was talking about oil going to $200, $150, $200. People still thinking that might well be the case, and we'll have to wait and see. But ultimately, a large spike up like that caused over the weekend with a gap, in my mind, was screaming a little bit of a bull trap there. And we did see that the price of oil has fallen drastically. Now, that in itself is a bit of a story, because we went from $120 all the way down to the low today of $76. It has recovered, currently sitting around about 86, which is about where we opened on the day. But just bear in mind, I said that move up was 80%. Currently where we sit at the moment, from where we were at the start of the month, we're still talking around about a 33% increase on the price of oil. And that's after the oil price has collapsed, which, seem to react off Donald Trump claiming that the war is nearly over, and he's actively going to try and help move the oil along. We'll just leave that there. As I say, not really here for the geopolitical commentary side of things, but we've seen it move. But the problem with oil being high, or increasing in high, in cost, price, whatever term we want to use, it's just what that has on the wider markets. And we will cover this in more detail next week, because next week is FOMC rate cuts. It's going to be led to that. But if oil continues to remain at a high price or continues to climb, it is going to impact on inflation. Inflation will naturally climb itself, which then is going to absolutely kick the Fed in the nuts for any opportunity for them to cut the rate. So it is something for us to keep an eye on, despite this meteoric pullback that we've seen over the last 24 hours. As I mentioned, we are still up 35%. And before we jump into Bitcoin's chart, I can't remember if it was Monday morning or Sunday night, I sort of posted in Discord that our favorite chart, the VIX, actually it wasn't on this one, it was on this one. Oh, it didn't save. Anyway, this was just relaying when I did it versus the S&P. We'll go back to the previous chart. It's a bit cleaner to see. It climbed all the way past 30. 30 historically, when it's high, you buy. Crosses that level, the volatility has reached such a point that we would expect a market recovery at some stage. And so it gapped open at 35. And then what we've actually seen through yesterday and today is the volatility index come back down to around about 22, stabilizing at the moment about 25, which is in itself still high. But the fact of the matter is that fall from 30 to 22, back at 25, has helped lift not just cryptocurrency, not just Bitcoin, not just altcoins, but the rest of the markets themselves. Gold is up, silver is up, the NAS is up, S&P is up. Most of the stocks are up, altcoins, Bitcoins, and the like. And so we are seeing volatility really coming into play, not just within Bitcoin that we expect to see, but also across more traditional, in inverted commas, stable markets. Now, we haven't dropped sort of to steady levels yet. We'd like to see it sub 20 for that before things should just continue as normal. But the fact that we are cooling off, potentially suggesting that this move could be short-lived, and we'll see how that plays out in some of the charts a little bit later on. I did go long on some assets following the climb through 34, so I went long on gold, silver, and Pippin. Pippin's pretty much break even. Gold and silver are doing okay at the moment. We'll just see how those ones play out. Having a look 3-day time frame, rest of the charts that we normally look at. Let's just blow Bitcoin up onto the bigger screen. And we can kind of see, since we last spoke on Tuesday, we came up to that. We actually broke through 72. We sort of got to around about 74. But in terms of those candles, pretty much coming back to that historic level that we drew. But the candle we're looking at the moment, which does close today, we have wicked up today to around about 72, just under 1,000. But you can see that yellow line there holding us strong. However, I actually kind of like the picture of Bitcoin at the moment. I think there is some short-term positive signs that we can look to build upon to potentially see price move higher. There are obviously levels of invalidation in which we need to get past or through, which we'll discuss later on. But right now, we are seeing that we are moving up. Even on the 3-day time frame, just looking at the candles, you can kind of see that we're getting higher lows every time. Technically, we've only had one, but it was a higher high. And we're starting to move in an upwards channel, shall we say. Very similar, very reminiscent to what we had back here at the back end of 2025. And how long this goes for, we don't know. But it's still ranging. We're still within the yellow banded range here. But rejections from it so far previously would take us all the way back down to the bottom of the range. But actually here, we're starting to find a bit more of a bottom in and around 65,000. I said last week, despite us being in this range for the best part of 6-7 weeks, we've actually spent the majority of the time above 66,000. It's only really been spikes below, closes below, which you can see there's plenty of wicks there, but there was only a little bit of a period down here in which the bodies actually closed down. This kind of shows you the buyers are trying to step in mid 60s. However, so far in the early 70s, the sellers are coming back. So just something to watch there. I didn't change these. I should have changed them. So apologies there. Bitcoin dominance, still ranging. Nothing more to be said about that. As for total two, so effectively a reflection of the altcoin market, one thing I would say, yes, okay, we have got this sort of base support, which we're playing off quite nicely. However, the one thing I will say is despite stock markets putting 600 billion back on themselves in the space of 60 minutes, despite Bitcoin breaking out of its range, altcoins generally pretty firmly within the middle of that range. And so, yes, they haven't lost the support, but I still think they're pretty tepid interest, shall we say, in Bitcoin, in altcoins, and how they're moving there. So yeah, it's nice to see we have got some green on the left-hand side, sorry, the right-hand side. But there's nothing that's really screaming a big move up. BitTensor had done well today. I think it was up at one stage around about 8%. That has come back. We're going to have a look at that in a moment. In fact, we're going to have a look at that right now. And here's BitTensor 3-day time frame. And we drew this sort of, we were talking about overall falling market, symmetrical compression, 49% to the upside, 51% to the downside was the call I made. And what they do, it popped up to the top. So for those of you still holding Bitcoin, playing with subnets, initially, very good move. I want to, take some time to at least say we are seeing that positive move, very similar to Bitcoin. We are forming higher highs and higher lows. So breaking of that trend, even on the 3-day time frame, you can see it. What would I have liked to have seen? I would, maybe I'm nitpicking here. Maybe I'm sort of be giving it a little bit more of airtime of how positive it is, and we'll do that when we go on to the lower time frames. But what I would have really liked to have seen when we broke through this, pretty much at the apex, what I would have liked to have seen is for it to break and close sort of above this level, which it hasn't done yet, but we only have 3 hours left. And the reason you want that is you've had all of this time sort of it squeezing the candles together, compressing, sharp move. You want to see that big move punching through, making some distance away from it. But really, we haven't actually cleared the candle that caused the first point of this previous resistance. And so there's something here that's sort of saying that $200 level, we'll have a look why on other charts later on. The sellers are stepping in there and just holding it back at the moment, maybe to catch their breaths. Maybe when we get a new candle, we can start to move through there. So I good to see that it's happened. Bearing in mind we were down at 140, 150 not that long ago, back at 200, but we still got a bit of work to do to get through it. And I suppose there's an argument to now be said. Hard to draw on the, I can't get rid of this. There we go. Is there now we're just actually in some sort of rising channel? We'll have a look on some other time frames there. But it did break through that symmetrical compression. I thought it would be more favorable to the downside, but the whole markets have turned around since last week. And we've seen that BitTensor is no different in terms of taking advantage of that news and moving to the upside. Anyway, let's just close that one down. We'll obviously get into charts a little bit later on. So one of the most pointless pieces of news, but I still think it's worth talking about. Posted it yesterday in Discord. Bitcoin, it mined its 20 millionth mined coin yesterday, around about 11 o'clock UK time, meaning that there's actually only 1 million Bitcoin still to be mined. And that million, it's taken what? 16, 17 years to get the first 20 million. That final million is going to take around about 120 years, which is, all about the halvings, what we apparently all love about Bitcoin. So what does this really mean for us? Absolutely nothing. It's just one of those moments where it happened. It's like watching the halving actually happen in real time. It's pretty much a non-event, but ultimately it is something, I don't know if celebrating is the right term, but at least noting that we are now down to the last 5% or just over 5% of Bitcoin left to be mined. The rest of it is out there in one form or another. And I suppose ultimately our beliefs as crypto or Bitcoin enthusiasts are that supply and demand. The supply is starting to dry up. There really isn't that much more being produced. And so ultimately over time, that's just going to lead to prices increasing against the asset. So bear that one there in mind. It happened yesterday in case it appears on some random pub quiz, which I highly doubt, but we shall see. I don't think there's anything in this article other than that. And here it is. Bitcoin now says 20 million there. 20,475,000. Bear in mind, we mine 450 Bitcoin a day. There you go. So it happened sometime yesterday from that. And I suppose that's it from that one, really. In terms of some of the other charts that we're used to having a look at the moment, Bitcoin on the 3-day time frame, and we're starting to see maybe for the eagle-eyed members of you, this positive kind of move that Bitcoin is making. But I'm first going to focus on the boxes. So yes, last week's price action, we had liquidation heat map here. Bitcoin rode that up, came pretty much straight through it, straight to the fib level here. This is the number one fib level based on the all-time high from March of 2024. It immediately rejected from that level, hit it perfectly, came crashing back down, found some base. This here is a new level that's just been built around about 65. And then again, we've got another new one here, 72 to 74. And we're kind of working our way up and towards that. You can see that on these heat maps here. Let's just get rid of all of these. Kind of see how those are built there. I've just overlaid them on that I had. Here we go. So this on the 4-hour time frame, same chart. I just cleared everything off so we can kind of see it. But obviously what I'm looking at in terms of Bitcoin's recent, so last, I don't know, 3 or 4 weeks kind of price action, 4-hour time frame, found ourselves at, oh, no, we didn't. We found ourselves a bottom down here. Obviously we've moved up, come back down, another move up, come back down. And you can kind of see what we're drawing here. Each of these moves are climbing up. Now we've had our 5th one. I mean, the next move here really should be telling us whether or not we've made it. Now, to do that, we need to clear and hold above 74,000. A close above 74,000, no matter how high, will give us this next move there. It may be preceded by a slight move back down, and that may come back down to the 70,000. But as long as we're in this trend, then there's an opportunity for us to either find a new entry point, for us if we want to spot buy, or to try and play the volatility and the moves that we're going through. We are still expecting Bitcoin to range, as we saw in December. And, you know, we've really got to break through some significant levels to do that. But we are at least starting to see some sort of semblance of a positive pattern here. And for anyone that actually wants to see, well, we all want to see, I suppose, but for those of us that actually believe we're going to get that move to the high 70,000s, maybe even the mid 80,000s before, you know, perhaps some more of a more serious return back to these price actions, you know, we ultimately need to continue with the higher highs and higher lows patterns, which is obviously what we're starting to see here. So what I would like to see over the next couple of days will be, you know, price to generally move back up in this direction, challenging the high that was set last week. I would then expect at some stage a rejection as RSIs gets high, as sort of buyers get tired or whatever, some sort of pullback down there. But as long as we stay above 66, we're still within that frame of reference. Now, the interesting thing with all of this is, despite us making higher highs and higher lows, the fear and greed index is bouncing around like nobody's business, you know? And we're always staying in extreme fear, but we go from single digits to sort of mid-teens, back down to single digits, back to mid-teens. So yes, okay, there is some sort of, you know, movement within the price action, but ultimately sentiment is still pretty much in the gutter in terms of how people are really wanting to dip their toe in. And that kind of suggests to me something that we have experienced throughout the majority of these last 4 years, or at least 3 years, is that actually it's probably more leverage trading that people are sort of dipping their toe into, and spot trading. I don't think there's, certainly from the fear and greed index, the necessary commitment for mass purchases of spot from the retail market. We'll, you know, we can have a look and see what BlackRock are doing, et al. We are getting to a point now where it is, you know, almost entirely black on the BlackRock channels. This seems small, this chart, it does to me. Let's zoom in a bit there. It's actually at 155, 175. Anyway, we can see it there. But yesterday, positive day. I imagine today will be positive. Bitcoin's moving up. It does tend to be positive, but not huge numbers. I mean, 100 million is nothing to be sniffed at. And as we pointed out last week, you know, it's like 1.5 billion had been bought over the space of about 10 days. So certainly some interest in terms of coming back from that there. The issue is, and you know, we've got to be realistic. Nothing has changed, you know, despite everything I've just said there. Nothing's changed from this picture. Even last week, we weren't too enthusiastic. Well, I certainly wasn't too enthusiastic about that move. You know, the point was to set your alerts at 72. Your alert should have gone off. We watch, we wait, rejection at 74. We've come back down. Ultimately, we are still within a range that we have been in for the last 7 or 8 weeks. And sort of analysts are sort of sharing that same, I suppose, nervousness, suggesting that today's high may mark a local high. Exhaustion's taken over already. We're going to start to see the market fall. And yes, there was some slightly mixed messages, I would argue, from the geopolitical point of view. But, you know, everyone's tendency to try and take positives from that. Trump knows how to spin a good yarn. And we saw the momentum move from it. But after, you know, sort of we all take stock of what's actually really going on and ultimately where that is, there is a concern that we have reached a local high and we won't be getting that higher high that I was talking about, but rather actually we are going to start to see price wane, and which when we, well, let's look at the charts now. We'll stick with this one for now. The problem that we may have, let's just get rid of this. Someone from the US is trying to ring me. We'll ignore that for now, I think. Let's just, oh, sorry. Let's just get rid of that. The problem that we've got, I suppose, is should this fail, should this fail to make an all-time high here, I'm not drawing that as a shoulder or anything else, but ultimately it's that first step of weakness in terms of the whole picture. And then we really start to call into question, well, where can this bottom be? And the argument would be, throughout this run, we have been able to make higher highs and higher lows. If we've failed to make that higher high, that move down could be into the lower 60,000, maybe a target of 60,000 itself as a retest of this actual base level. I would go so far as just to stick within these ranges here and suggest that maybe that 63, 62,000 is kind of level that I would be sort of interested. We got to that, I'd probably be looking at trying to flip from shorts back into longs from that point of view. So I think unfortunately we're still stuck within that sort of, it's nice that we see positive moves on the day. And as I say, 71,500 at some point today was quite nice to see, especially off the move that we saw from yesterday. But until we actually clear that 72,000 and stay above it, I just don't really see how we can get too much more excited. And if anything, this last 7 or 8 weeks has told us, is now that is the time when we get to the top part of this range to start thinking about actually taking any profit from any trades we've had and looking to reverse it. And you take a look at the weekly time frame for Bitcoin. I have thrown the EMAs on here. The new EMA is also the yellow one, which is the 10 EMA. But just look at that weekly candle, okay? I mean, it's in a falling market, so high test count. It doesn't particularly smell? Okay, doesn't smell great either, but it doesn't look great. That's the point I'm trying to make there. Pretty much up to the 10 EMA on the weekly time frame, rejection from there, but an absolute collapse. I mean, we got a sniff, that's why it smelled bad, of 74,000, and the sellers went, nope, no more. We're going to sell you all the way back down. And we actually closed Sunday night at just under 66,000, and it was just yesterday with oil and sort of that the VIX climbing above 30 that really helped skyrocket us back up. And we've seen sort of what's that going to be, round about 6 or 7% increase over, I don't know why I don't just draw the chart out, can't be bothered now, over the past sort of 36 hours to get us through there. But from a weekly time frame, there is nothing there that is saying to me this is looking particularly positive. I will grant that it is a green candle. It is possibly the worst green candle we could have possibly had. I would have rather that have been a red candle than a green candle with an absolutely tiny body and a massive tail. So yeah, that does not look great to me from a weekly time frame. Obviously, we get a good strong candle today, engulfing the entire wick and closing in and around or above that 10 EMA. I'll be delighted on the week. I'll say fair enough. Ignore that one. But otherwise, I'm kind of thinking that it's not a particularly attractive candle, rather more ominous of what may come in the future. But then we get to the serious talk of even if we can go up the levels, 74 we've talked about, mid 80s we've talked about. We could even talk about sort of this 85 level, which is the base of pretty much the range that we had through November and December, which by that time to a 50 EMA will probably get down to there. So that's the headwind we're running into. And so, yes, we may get a run. I can't decide if last week was that run or I would rather have hoped that we can get a little bit more to sort of the high 70s, early 80s. Really, that really trapped the bears in as people started talking positively about Bitcoin's recovery before it moves back down. But there's just so much ahead of us, which is why, for me, I still believe that the bear market is there. And I know other people don't believe that, and that's absolutely fine. I find it hard to justify how we can't see it's a bear market, but there it is. It was, I mean, it's not quite, I thought it was. The top, was 5 months ago. We're almost halfway through the duration of a bear market, and yet people are still suggesting that this is just a significant pullback. We are going to need one hell of a V-shaped reversal out of this for me, in my opinion, to justify that. So it's just an opportunity for us to try and take advantage of the volatility on the way down. But ultimately, I'm still favoring shorts. And with that, I have to just, judge how my entries are. The top of the range and at the bottom of the ranges. It's very difficult to initially just go, right, we're at the very bottom of the range, 62,000, I'm setting it long, because at some stage, I do think the shorts are going to take over there. But, that's just part of balancing and having good discipline, which, sometimes I do and sometimes I don't have from there. In terms of the weekly time frame, the daily time frame, you can just see the 50 EMA here, that move up like to it, reject immediately at the 50 EMA. Yes, we have found today that we are above the 10 and the 20 EMA. It's only one candle. We've still got that 50 EMA, 74,000. Nothing's changed. We've got to get above that. The chart may look different, but the TA around it is no different. We've got to get above and stay above $73,102. Then we can start talking about how far that moves. We did that back in January. It didn't last long before, we got tired and we fell away. But until we get above that, there isn't really much point in getting too enthusiastic about some of these moves. We've done that, we covered that, we've looked at that, I was going to talk about the Fed watch, I forgot to bring it up, but at the moment, next week's Fed meeting, there's a 97% chance that we ain't getting a rate cut. I think with what's going on in the Strait of Hormuz, I think the Fed has all the ammunition it needs to say, we're going to pause, we're going to wait, we want to understand what's happening, the data's not really filtered through yet, let's give ourselves a bit of chance to see. It is, that's just what will be interesting. And again, I don't think it will actually factor in it too much. It's too recent, but it's CPI data tomorrow. So maybe we might see something there. I can't imagine that something happened 48 hours ago is going to be able to have such a detrimental impact. It was either already going to be higher or lower. Higher, if we're thinking that the price of oil and the conditions that are going on in the Middle East are going to impact interest. It should either already be higher, or we will actually have to wait for another 4 weeks until the next CPI print for this to really filter through. Shame, they get pretty close to the 2% mandate, but this could blow it out of the water completely. I didn't bring it up. I think I mentioned this Financial World Update news. It is pretty good. They sort of come into some good updates from this, but just at the moment, all of it is just about sort of oil's rise and fall. This is the last couple of days. It just sort of breaks it down, summarizes quite easily. But here's a the reality of it. Saudi Arabia, UAE, Kuwait, and Iraq have cut oil by 6.7 million barrels per day. That's a third of all production. We approximately do 20 million barrels a day. We're now down to around about 12 million barrels. And from as I understand it, and again, I'm no expert, it's not just a switch. We're not going to suddenly we're turning it all back on and suddenly we get an extra 6.7 million barrels that very day. It takes a while for the machine to churn up. And even if they do, this was something, I don't know how true this is, but this is something that caught my eye. The Hormuz traffic, the inbound and outbound numbers almost at zero. We were normally at sort of around about 50, and now we're down to zero. There is literally standstill there. So even if they were producing the oil, it can't go anywhere. And I think it certainly, in my mind, seems to get spun that these oil refineries are shutting down production because, you know, they're worried about it getting bombed. My view is probably there actually isn't anywhere to store it now because none of it's moving. And so we're probably just getting a bit of a backlog there. Anyway, instead of trying to keep the geopolitical out of it. But if you don't already have this and you are on Telegram, I'd suggest signing up to it. Some pretty good stuff. It's not just about oil. There's plenty of other stuff. As I say, it can have the occasional, oh, you should sign up to what so-and-so group, but I just ignore those. Anyway, move that down. So right, let's get into the main charts. This isn't the main one. This is obviously the VIX, but we'll put Bitcoin up. We'll start to have a look at everything else once I've had a sip. And we've actually talked about the daily for Bitcoin already in terms of, yes, I can see this positive moves coming up. Great. We're resting on the 10 and the 20, but we've got the 50 in our way. And until we break that, my alert remains 72,000. Alert will go off. Actually, I cancelled them because my 2 alerts hit. But I'll re-put those on 72 and 65 or sub 66, I suppose. And I'll start to consider having a look there. In terms of the RSI and the daily, absolutely fine. This could go either way, the RSI. There's no exhaustion either way, overbought or oversold. But let's drop it down to the 4 hour. We're starting to see a little bit of a picture. And you're going to see this on some of the altcoins as well. That actually, yes, okay. The 50, the 10, the 20, because we've been ranging for the last 7 weeks, there is no surprise that on the 4 hour time frame and as we get lower, a lot of these EMAs are pretty much on top of each other. It doesn't mean that we should ignore them, but ultimately we regularly break them and then come back down. So they don't carry as much weight. But what does help guide our emotions or the decision where it's going is at least glancing down at the RSI. And again, just because we hit overbought doesn't mean the sellers are coming straight away. We can continue to climb through overbought plenty of times. But it gives us an indication on the 4 hour. We can kind of see we got close to the oversold 70 down here on this big red candle, and it started to turn around. So as this starts to build, we're thinking, okay, we expect to see this climb back up. Now, we didn't fully get to overbought territory down over here a couple of hours ago, and we start to see it sell off. Now, this could quite easily continue to climb upwards. So you can't ever use the RSI. I think I've said this every week on its own, but it at least starts to give us an indication that is this the right time for us to place a long? We've never opened a long. Is now the right time to do it? If we're using the 4 hour time frame, I'd suggest probably not, because the risk to reward is probably not there, and sort of like how you're setting your stops, etc. Because the 50 doesn't act as a great stop because we've ranged for so long, so it can be quite difficult to find it. So for now, you just accept that you've kind of missed the move, and you try and wait to understand where this one pans out. Now you can drop the time frame down, and we go onto the 4 hour, onto the 1 hour, and we can kind of see, look, on this one, it stayed relatively high, but we're still in the. So I actually think that this gives me a bit more hope that maybe we can see that next move up, because yes, we've had pullbacks through this, but it's never really dropped too far. Okay, we have dropped to the lowest point we've been in the last couple of days, but we're still above the 50 EMA on this one. And because we're on the hourly now, this is starting to spread out. We've got above the 800. Oh, no, sorry, apologies. We're now down below the 800. I was looking at the wrong area. But we're fairly close to that, and a battle in and around sort of 70,500 for us to climb through. We've had that sort of retest back to the 50 EMA, come back down to the cloud. This could quite easily take that move there. Now, that doesn't mean that it's going up here. That's what we needed from the big picture, above 74,000, for us to get excited on an actual trend higher high. But in terms of the short term, it could absolutely get there. We never quite got to overbought, whereas previous times, the overbought, the oversold, we can see clearly now. Well, you probably can't because it's not. You can see clearly that these sort of tie in, and then we start to see these periods of reset. Whereas this, we're just building upwards. I think there's still plenty of opportunity for this to move up on the hourly time frame. And so what I'd be looking for, I can get rid of these just manually, is I would probably favor a continued move up until we close below, let's just call it 69,000 flat. A close below 69,000 flat, I think, well, maybe we might have to concede that 71,500 was the local top, and we're likely to have that move back down. There's no real vectors on the 1 hour. There's one around about 68. It's not too deep to pull us back down. The only one after that is down in the low 65s to consider there. So for me, for Bitcoin, a strong move up. As we get down onto the lower time frames, I think there's possibility for a little bit more of a move. But as I say, it's unfortunately the top end of a range we've been for 7 weeks. It's a waiting game to see if we can get through 72,000. BitTensor. Now, someone put in Discord about writing a book about BitTensor and its battle with the 50 EMA, and I think it's very true, because I saw that we'd broken through the 50 EMA today, and I was like, brilliant, we're like 215 or something like that. Great. And now we've suddenly started to see that actually it seems like the sellers have stepped in again and pushed us back down. Now, we are still technically above the 50 EMA, so that's absolutely fine. And I don't want to shit on that too much right now. As long as we can stay above it, I've got no problems there. And similarly to what I was saying with Bitcoin, after finding this bottom, we've come up, we then found another low. We are technically just above it at the moment. So we need to close above 200 to sort of reform that kind of level there. But we are still making higher highs and higher lows. RSI on the daily time frame is absolutely fine. Nothing really to be too worried about there. For me, the worry stands in just the history of where BitTensor is and some of the issues that we've had, which I've gone through before. But obviously 215 base level here, and then we're starting to get to the 270 and the Gandalf line around about 300 at the moment. So bit of work in our way, but there's still opportunity to be had through those. I haven't had the courage, shall we say, to long or short BitTensor as of yet. Maybe I should have done, because it's certainly performed better than Pippin has over the last couple of days. But I just haven't really wanted to dip my toe back into it, because I need to see it. I'm going to feel a lot happier trying to take along above 215 towards even 270, 300 level, and sort of, messing around at the 180 level, whether it's rejection or consistent rejection at the 50 EMA. Again, that balance of risk to reward just didn't seem to fit right with where I was looking. Now, in terms of some of the lower time frames on the 4 hour, again, we haven't really breached into overbought. We'll continue on these moves up. And actually, from a 4 hour point of view, yes, okay, we've had a bit of a retrace from that candle, but I'm ignoring the high test from that. We've been ranging sideways. It doesn't necessarily matter. We've had a nice little double bottom. Well, I say double bottom because obviously not the very bottom that would have been. But we've had, a bottoming, local and bottoming pattern there. 50 EMA broken with a green vector candle has managed since then to not only stay above it, but stay above the 200, the 10, and the 20, all looking good. So on the short time frame, I got absolutely no worries there. And I'd even say, even if it did come down to sort of 190 level, recovering 50% of that vector candle, no problem whatsoever. Staying above the 50 EMA, it's just building a fairly decent picture that actually maybe we are re-attacking for that 215 level. Something to certainly look out for there. As I say, I'm not going to look to long it unless we get above it. And to be honest with you, I don't know if I really fancy shorting it either at this level right now, just given on what we said there. In terms of things like Pippin, just because, this is where I sort of, where was it? It's 200 EMA, or 800 EMA, sorry, trying to short it. Obviously, we had this move up to the 50. We came back down. Everything else moved. So, well, what am I looking at? It should be on Monday. Monday, yeah, here we go. That's where it was. So came back down to this level, got long in. I didn't get it in at here. It was around about 34. So it's a little bit in profit at the moment. But still a bit of work to do on that. For me, I just zoom out with Pippin. I just think when it does want to move, it can still move pretty fast. So it's a low trade, higher risk. Hopefully trying to benefit from that. Similar to BitTensor though, it's got to get above that 50 EMA on the 4 hour time frame, which it hasn't done since February. Even that though would be to 40 cents, a fairly decent move. But as I said, if you look at some of the history of its moves, it really has moved strong and trending that way after periods of ranging, which is what's happening now. So maybe it's a bit more of a punt feel to it, but that's where we're going. Gold and silver, again, this just felt like this was hitting a trend line. Seemed like, obviously, with just how the market's opened, it seemed like the right time to place a trade. And so that's what we're doing. So these were from the levels from the short, so you can ignore those. Just haven't unsaved those on my map chart even. Ethereum, nothing's really changed in a lot of these. And you can kind of see, so BitTensor, we were above the 50 EMA. Down here, we're just ranging sideways, 50 EMA, holding us back. We've still got this 200 level, which is now tying in with the 50 EMA. And for me, yes, it's a similar picture to Bitcoin, but for some reason, it still seems to show a little bit, it shows less strength than Bitcoin has done, despite the same patterns of higher highs and higher lows, just because it hasn't managed to sort of really tackle this previous high as close as what Bitcoin had done. And now the market's potentially starting to feel a bit tired. Could we just see further weakness from that? As I said to you, that's reflected in the total 2 market that we saw earlier. I think this is almost a carbon copy of it. In terms of levels that I would be looking out for, then I don't know if we can draw a trend line like that, or if we want to try and connect the wicks down here and just be, you know, I mean, they kind of cross over on each other actually when you do it that way. But kind of 1900, you know, we've got to hold 1900 really. There are some lateral ones around about 1800, but continue to hold 1900 gives us a chance of just at least building some steam with that move back up there. But I'm not particularly interested in Ethereum's progression unless it gets above that 50 EMA. Feels like it's been the same kind of conversation for the last 2 weeks or so, but that's what happens when we're in a bear market and we've ranged for an amount of time. We just have the same targets we've got to get through. I mean, you could argue, let's just set an alert for 2,200. We clear above that. Let's start looking at Ethereum. And likewise, we lose 1,900. Let's look at Ethereum that way. Some of the other ones are all fairly similar. Near is the one that is doing better. As I said last week, it's moved up. That vector candle almost completely recovered, but actually it's managed to find a base here and it's back above the 50 EMA. Still room on the RSI to go. Not sure what's driving it, if there's fundamentals or not, but looking strong. But the rest, fairly similar. I know I'm only staying to the daily, but if I break it down onto the 4-hour hourly, it's going to be the same picture. So there's no point wasting mine or your time with that. In terms of, we've done dominance. Just sort of, well, actually, interesting things. I know someone put it in Discord a couple of weeks ago about, and I talked about it on a call 2 weeks ago, I think it was. Just trying to balance the USD versus pound currency conversion. And nothing hit me truer than actually looking at my SIPs today with Circle, because as a lot of you know, I've been buying Circle, bought some at 120, and then I bought some, down at 70 and 65 and a few other areas. And so I thought, right, well, we're back at 120. I must be absolutely rolling in it. But of course, I use Hargreaves Lansdown. And so whilst I look at the chart in dollars, they do an automatic conversion for me. And I was amazed to see that I'm actually nowhere near as up as what I perceive to be. And it is because of just the strength of the dollar at the moment and sort of how that's impacting on the pound. And so it made me think about if I wanted to sidestep stocks in my SIPs, not that I do it on an on a knee-jerk reaction, but for example, I did sell Palantir wrongly because I sold it at 134 and it's at 151 not so long ago. But if I wanted to move out because I saw the price going down, I would get an even bigger haircut because I've also then get it converted back into pounds and let it sit out there. So I suppose I don't have an answer for it, but a lot of us, or certainly for myself, I so used to looking at stocks and crypto in their dollar value that I really underappreciate the impact it can have if you did want to take it back to fiat and the pound, in that you're going to get doubly hit right now just because of the strength of the dollar and where things are going. And speaking of the dollar, interestingly, despite that positive move up and everything's been going on, good old TA, the 800 EMA, it's just come back in, and this is something that's been holding us for, best part of 6 months now. And we've come back up here and we're struggling to get through that. We're pretty much at parity at almost 99. But as you can see from the closes there, being held off by the 800 EMA. So it'll be interesting to see how that one pans out. Obviously, the rally over the last couple of weeks has been significantly helped by what's going on with Iran and just that uncertainty and flight to dollar and safety and all of that kind of stuff. But, realistically, we'd love to see that tank get a bit more strength within the pound. So that if we are wanting to come out, pay tax bills or whatever, it's not as painful as it is. So definitely something to consider going forward. In terms of the NAS, worrying yesterday because we actually came all the way down to sort of, sub 24. 24 was what I was talking about on Friday. It's been a level that we want to have a look at, but actually immediately bought back up as the VIX started to cool. And we can see now getting close to it, but still under the 50 EMA. And I suppose ultimately the concern is, are we just chopping and look, we're failing to make new highs and actually the steam will run out, and that's the direction we're going. That's certainly what we've got to watch. And I think, for us, or certainly for me, I still stick with that sort of 24 level. Maybe you can set, an alert. Let's just create one now. Crossing price. Yep, that's fine. It's done it at that 24 level. Okay, well, that's not quite where I wanted it. I was going to put it at the 200 EMA, but I'll change that later. But certainly something to have a look at in terms of, we went on such a stellar run for such a long time, and now actually we have been having 6 months of pretty much failed attempts at new all-time highs. And actually for the last 2 months, we've been below the 50 EMA, and we've really struggled to sort of gain any kick and momentum within that. So, for those that believe there may be a recession, short as it is on the cards, oil spiking up may be an indicator of that, inflation climbing up, etc., etc. What that might do with the unemployment and everything else. The fact of the matter is that the charts themselves may be giving us an indicator that we have not been able to get, even above 25 and above that 50 EMA, despite positive earnings, positive moves in narrative, AI, etc. I think it's something to certainly have a look at. And that NDV, non-directional volatility, as we've talked about, usually a sign of people exiting positions at the top. And it's one of those things you look back on and go, how did they know? They didn't. They caused it. S&P, exactly the same, back down to a similar kind of level, still below the 50 EMA, hasn't made a real attempt in that. 7,000 is what you want to be looking at. That's what we need to be getting through. In terms of some of the ones on the pension, Circle has been absolutely flying. I'm not sure why. Yes, its earnings were okay, but it is moving. And so there is a part of me which worries that we will come down and fill this gap and all those gains are going to be lost, but we believe in it for other things, and it's in the pension pot, not in the trading pot. So we'll go from there. Nvidia holding its own, but again, looking quite similar to the NASDAQ, really. Palantir, semi-defense stock, so intelligence and all that. So that has climbed in the last few days. Tesla's slowly coming down. Coinbase has moved up as well, actually, to be fair. Microsoft, MicroStrategy, yeah, not looking great. Astrid, I don't really follow it, but down at the moment. So, Smart Web Company and TauX all there. So I'm just going through if anything's sticking out. Nothing really. I was looking for this earlier, the pound and the dollar. But anyway, I think that's probably enough. I've rabbited on for a little bit there. I pressed the wrong button. There we go. I appreciate it's kind of chart heavy, and ultimately the picture, it hasn't really changed, but I will go back onto this chart now. The reality of why, what I regurgitate, talk about hasn't really changed is because ultimately the picture hasn't changed, I'm really fumbling the bag here with, that's what I was looking for. This picture hasn't really changed. And so because this hasn't changed, we're still within this range. For me, there's nothing to get excited or too worried about. There are opportunities, of course. But until that changes, until we see outside of this range, then I'm not really gonna. Well, I don't think that there's only so much amount of TA that can really be done to try and understand what we're doing. Yes, we can look at smaller timeframes and potential opportunities there, but with those come smaller timeframes for getting in and out. So anyway, that's kind of where we are. Hopefully by Friday, we will be above 72,000. If we do get a bit above 72 and stay above it, I'll be letting you know. I'll be telling you what I'm doing. But I would then foresee a move to sort of that high 70s, low 80,000 kind of level. So this sort of green line up here before an ejection. Yes, there will be a trading pub Thursday afternoon, 1 o'clock UK time. Just to remember, for anyone that is in the US, your clocks have gone forward. Ours don't go forward for another couple of weeks. So it's only a 4-hour difference between the UK and Eastern Standard Time. Wherever you live, work that one out. I will do a live on Friday. Not sure what time, but it'll be in the morning. We'll do some charting again. Hopefully the picture will change and we can go from there. Other than that, enjoy the rest of your day, evening, whatever. Enjoy the rest of your week. Any questions, of course, we'll be in Discord. I know it's a bit quiet in there at the moment. That's kind of how it is in bear markets, but I am more than willing to, have any discussions that people want to talk about. Other than that, I will speak to you all soon. Cheers now.